A great pleasure to connect with Raamdeo Agrawal, Joint Managing Director and the face of Motilal Oswal Financial Services. Raamdeo ji, good morning. Thank you for joining us. Hard to believe that Rakesh Jhunjhunwala is no more. They say legends never die. And he was truly a legend, someone who redefined the definition of stock market for an Aam Aadmi.
Yeah, for us, he was a true friend, you know. And as I call it, यारों का यार, you know, मतलब आप उनकी जितनी भी you must also be knowing, yes, you must be personally have been touched. You were very close to him, so you know the way he was. He meant very special to every friend. You know, of course, friends will always have a special position for him, but for him, every friend was very special. And
you would remember your birthdays, you would remember everything. Your family members, you would remember everything.
Even in last few months, I mean, I was stunned to see his 2 appearances in last 1 month when Madhu's mother's prayer meeting was there.
Yes. He made it a point he came there.
He came from hospital. Yes. To go back to hospital, but he was there for
I
quite some time.
I was there only, yes.
That 300, this thing, DMart function, late in the night at 11 o'clock. That is the last we met.
Yes. So the Casa launch, I've been told that he actually took the first flight from Mumbai to Ahmedabad.
Yeah, that, no, of course, that is well known. So, यारों का यार था. मतलब like, वैसा, ऐसी personality, this kind of people, they don't come every day. You know, they're very special.
I mean, we like to remember Rakesh Jhunjhunwala, the big bull, the man with the Midas touch. But behind everything else, I guess he was an extraordinary human being. I mean, India has never seen a cheerleader like this, and I don't think you will ever get a cheerleader like this for India.
India bull, you know. I mean, always, you know, that the faith, that optimism about India and India's story. That was the foundation of his entire bullishness, right from. I mean, I know him from 88, in between that little bit of the bearish market, but otherwise throughout, relentless. And every time it used to surprise me. I mean, I also have positive views of the market, but the way he used to come out and I mean, he will push in terms of bullishness about what is possible. You know, he was almost
he would bet big and even make bigger gains. Let me put it this way.
Yeah, so he was unqualified optimistic about India's future and India's story, and paisa to yahi banega, you know.
And his investments are, I mean, all in India, all in equities, hardly any real estate.
But what stands out is his capability to see bargains, because market is about value and price. You know, price everybody knows, but who knows the deep value? And he was the guy, you know, who would be able to when everybody is against, the whole market is against, he will say this is where.
What role do you think luck played in his career?
Luck तो सबका होता है, ठीक है. I mean without luck, I mean to be in a stock market in 80s, 90s, 2000, that itself is luck. To be born in India is a luck. You know, so you can keep counting your luck many times. If you are born in some Nepal or some other place, I don't think he would have been. With all the skills, he would not have reached where he reached. But that's one. I mean, Buffett says Oriental lottery. You know.
So, what is that one thought of Rakesh which you've actually implemented, where you said, "Look, Rakesh is saying this. Buffett does not agree with what Rakesh is saying, but I will go by Rakesh's understanding rather than Buffett's knowledge."
See, ultimately in the stock market, you have to go by your own convictions.
Okay.
But what I saw in him is, I mean, he was not a duplicate of anything. He would have very original thinking. You know, his way of approach will be original. He'll bring convictions of his own thinking. You know, his own philosophy, and he was fearless in terms of. If I say this group is not, he would say. This is fine, this is good, you know, and he will back the management and the company in long term. See, basically, he looked many times as if he's, you know, le fatafat, de fatafat types, you know, but he was very, very long term. All the wealth has been created by him with his long term successful bets.
Titan, Karur Vesa Bank, Lupin,
whole lot of them.
Another one.
And you know, one of the quote in his office was, "It is, I think George Soros or somebody. It is not about how many bets you got it right, but how you dealt with that. How do you, because nobody gets it 100% right.
Yeah.
But when you get it right, how do you make it big? You know, I mean, a lot of people would have to sustain 100 bagger 1,000 times, 2,000 times in the portfolio right till end. That's what is the legacy of Rakesh. That yes, he got Titan right. Probably we were selling at that point of time for some institutional clients. But you know, getting right is one thing, but you buy at 30, 35, 40, but at 100, 200, 300, 500, you just walk out.
You know, we'll play a bite of his, and I'm just going to remembering a comment which he shared with us that, you know, how he's such a trader and how he's essentially such a powerful investor is quite extraordinary. And he also goes on to make this point that, look, because of his technical analysis, he's been happy to hold on to stocks which may be far, far, far you know, above the mean value of the market projections. Let's hear that view, and then we'll continue our conversation with Mr. Agrawal. Well, that's Rakesh Jhunjhunwala. I think this is when I distinctly remember going for this function. I think this was his daughter's birthday way back in 2003. There you could see Mr. Jhunjhunwala. Good times, and you know, our sympathies and our condolences to the family. That is his mother, late Mrs. Urmila Jhunjhunwala. You could see Ramesh Damani there. Okay, that bite, and then I'll get Raamdeo ji to react to that.
98% of the money made in the stock market is by being a bull. It's important what we buy. I think it's more important what price we buy. You know, you have to dream. You have to dream with your head held high, but your feet on the ground. Stock market is as much about psychology as about reality.
Correct.
Right? So unless you have a temperament where you can adjust to the stock market, you cannot succeed there.
So you have to really...
And the only king is the market. There are no kings in markets. They say markets climb a wall of worry. When I see so much worry around, I feel refreshed. There is DNA. India's DNA is such that there will be growth. We have the best skills in the world, right? We did not make the nuclear bomb by stealing technology. We did not sell it quick. If you read about the mission to Mars, how we have done, it's unbelievable, right? Google has an Indian CEO. Microsoft has an Indian CEO, right? Tata Sons has someone educated in India. So Indian skills, it's a genetic quality of Indians. We are going through the most favorable evolution of a demographic profile. We have a deeply ingrained democracy. I know of no society which has achieved growth and retained it without democracy.
Well, we'll all miss you, Bhaiya. That's what I would say. Here comes a guy who says, look, I'm good at trading and I'm smart at investing. He changed the rules. World has only seen smart traders. Soros is a trader, Buffett is an investor. Here's a combination of a smart trader and a great investor. Very rare.
He had dual personality on that. That he was and he used to love trading, more than money. Money so he already made.
Right.
But he used to love to be in the market, call the markets. He will always say, it's not about money, it's about being right. So continuously he used to be testing his own convictions, in the marketplace. And that's how, he was always alive. He'll always be tracking market more than anybody.
I asked him that
right through the night.
I said, has there been a day in your life where you've not looked at market? And his response was, even on my honeymoon, even though there was no mobile phone, I made sure that I'll call up Bombay Stock Exchange, my broker, to check what the rates of the Sensex were. So that was his passion for the market. It's interesting that I used to always ask him that, look, you made your wealth by trading and you advise our viewers not to trade. He said, look, Daddy कहते थे whiskey मत पियो मगर खुद पीते थे. We'll try and get that view out, but that was him. He said, if you're an retail viewer, stick to sips, don't trade. I'm a professional trader, I know the art of trading. Maybe a lot of our viewers will not have it. Quite extraordinary.
But maybe at the starting also, he was not outright trader. He was taking big positions, maybe leverage position, and he would borrow and buy stocks. But big breaks came only by investing. Maybe some of the early breaks were in very quick 1 year or less than 1 year. It will be multi-bagger types. At that time markets were very inefficient. So, but I would say still foundation to best of my understanding.
Did you and Rakesh buy stocks together?
Never.
Was there any stock which you
Very
said?
rarely. Very rarely.
Why is that in India? If I look at the portfolio of the great investors, a portfolio of Raamdeo Agrawal or a Rakesh Jhunjhunwala, or a portfolio of Rakesh Jhunjhunwala and his guru Ramesh Damani,
Yeah.
or a portfolio of some of the big investors which is in the public domain, even Nimish Shah.
Yeah, yeah.
The portfolios are very, very different.
Very different.
Why is that?
Because we have different backgrounds, different way of life, and different companies you are interacting with. But the common thing is the price value gap, margin of safety. There are thousands of stocks. You need 10, 15 stocks. So obviously you are searching in left direction, somebody is searching in right direction, somebody is going in the front. So you interact with a different, you're reading different magazines, different books, you're meeting different set of people. Your social organization is different, your academic background is different, your understanding is different. So with that you come across different companies at different point of time. The issue is the successful investing has only one simple rule. That is a deep and deepest possible bargain and margin of safety. And that's where the commonality comes, whether Rakesh or anybody else. A guy who could buy 100 rupees stuff for 10 rupees or 50 rupees, he is going to mint money. Now
But
the
for
counter
that
could
to
be
happen,
anything.
But sir, for that to happen, you'll have to wait for a bear market.
No, that is the beauty. You can, the funny thing about the market is that all 2000 stocks don't make high. There is always a new lows. There'll be, if there are 50, 60 industry groups, of that, say about 25, if it is a bullish days, what will happen is 30, 35 industries will be making highs or going new highs. But there will be 20, 25 which will not be doing so well. And you need those nuggets from those kind of, like say, steel industry was not doing well for so many years. And Tata still came to more like 200, 300 bucks.
At the peak of the COVID.
And then in next 12 months, you see it became 8, 9x. So, so it's not that bargains are not there, but number of bargains become fewer. It becomes difficult as the market climbs. But it's not, you don't have to be very, very deep bargains. And those extreme bargains, they come once in 2 years, 3 years, 4 years, even for the legends. As I said, it's not about how many strike was good, but how much you made out of that strike.
So bet and bet big.
Bet big and then spend time with that. Because compounding doesn't happen in 2 years or 3 years or 5 years. For Titan's story to fully unfold, it has taken 20 years. And 20 years is a full lifetime.
You bought Hero Honda at a very initial stage. But what really did the trick for you was perhaps you sat on Hero Honda for
20 years again.
20 years.
18 years, 20 years.
So even though stock at some point in time must have gone above its mean value, brokerages must have called it a underweight or a over-expensive stock, that did not bother you?
The real thing is the starting point. At what price you bought. I bought at 30 bucks and in 2 years, 3 years time I got maybe 100 rupees, more than 100 rupees dividend.
You still did not sell?
Then it's all free.
Yeah.
And company was doing well, it was growing and wonderfully managed. So, starting point is very important in long-term investing.
So when did you sell Hero Honda?
I sold it when in 2014 or so, when I was collapsing my portfolios into my mutual funds.
Okay, that's the person.
So I cleared everything.
Okay. But it was a call purely based on a portfolio allocation, not on the company.
No, I just sold all the individual stocks.
Okay.
So that time.
Do you see the same growth runway for many businesses for next 5-10 years?
It's going to be far, far higher. Because see, the size of the pit in
Which
India.
is the economy size.
Say like, if you see yesterday's Prime Minister's speech, he's setting goal for 47. This is the spirit of the nation. How many countries are there who are going to grow at 6-7% for the next 10, 15, 20 years? And it's a very sustainable story. We are not very rich, but when the global average is $10,000, $12,000, $13,000, we are at $2,500. And we are the guys who are supplying manpower to run the best and the biggest corporations in the world. So clearly we have a chance, or most likely, the way, I would say the way my last 40 years gone, the next 40 is going to be like that only, or maybe even more exciting. And the world is becoming prosperous. World is today 100 trillion. In 95, 97, maybe it was 25, 30 trillion. The scales have changed, and it will change even bigger. The global opportunity is going to go from 100 trillion to, say, 200 trillion. But Indian opportunity is going to go from 3 trillion to maybe 30 trillion in that same space. So, and every company doesn't win.
Yeah.
There is always going to be new companies.
Who
new
has the right to
industries.
win this decade?
Yeah, so it's a different discussion, like, where we have edges, the companies have, industries have edges, So, your consumer companies, your digital companies, your, a lot of opportunities will be there. Actually, opportunities will be there across. It is all question of, is it a good business run by good management? And if you are lucky enough to spot that at a bargain price.
When we spoke last, and that was at your office, and I think the conversation was in May end, May mid actually, the world was worried about inflation. Your words were, inflation आएगा तो घर जला देगा. Be wary of inflation. Then up comes inflation. Now inflation is down. Is that macro adjustment of inflation, scare, interest rate, is that behind us?
Macro is very unpredictable, and macro probably per se might be predictable, but what the markets have priced in and how the markets behave in the same set of predictable macro, numbers is very tough to figure out. You can predict macro, but you cannot predict what the markets will do. That's been the thing. Everybody's surprised by the, like COVID. When COVID happened, we thought that it's almost like end of the world. Yeah. And what happened? We had mini bull run for last 2 years. So there are a lot of moving parts when you talk about market. That's why getting focused on investing about individual stocks, your portfolio, that is extremely important.
I understand that, but if one has to understand that the nature of the market is such that the winners, they keep on changing. What has worked in the past may not work in the future. Companies, they go through that cycle. Young companies become, small companies become young become mature, and from mature they become declining companies. How would you apply this entire time curve of companies in your filter? Because what has worked between 2000 to 2010 has not worked in 10 and 20, and may not work between 20 and 30.
Yeah, so that's where research comes into play, your own understanding of the state of the industry. What are the relevant industries going forward? What is the global experience? Which way the tide is turning? Which are the industries which are kind of in a decline mode? And which are the, like say, automotive. You need personal transport. Yeah. There is no going away from needing a personal, whether you need a horse cart, whether you need a scooter, whether you need a motorcycle car, or whether you need electric car. But I think personal mobility is important.
What are you betting on? Are you betting on EV? Are you betting on ICE?
So that's what I'm saying. It's a point of time. At some point of time, India was a two-wheeler story.
Yes.
Now it might turn out to be a low-end car story. And then from car it might turn out to be EV story. So who is going to win at that point of time? You have to take that call. You become insightful. You read something, you observe something, and you become insightful about some big trend. And you bet on that. Like in 90s, 95, one of the biggest trend was software. And I didn't know the difference between software and hardware in 95, 96. And you saw what has happened. And today, that industry which was non-existent in 95, today it is 23, 24% of all the corporate profits. And in a most predictable fashion, highest quality profit come from IT industry.
$200 billion, more than Aramco's oil export.
Yeah, so this is the nature of the market, where even the trends are not that short term. It's not a 2-year, 3-year kind of a thing. These are very large, long, kind of trends. And that, like private sector bank, from public sector to private sector banks. It started in 95. Today you're given birth to 4 or 5 very large banks. Yeah. But the opportunity size in next 10, 15 years, when you want to go from 3 trillion to 6 and 12 again, 6 and 9 and 10. This is all a story of credit. And who's going to underwrite that credit? Today 125 lakh crores, you're going to go to maybe 350, 400 lakh crores in next 10 years. So where are the institutions? Those institutions has to be in the place. They are not the institutions which are going to be born and you will give license and they will underwrite. All those institutions who are going to underwrite mainly are in place right now. Who has that wherewithal, who can underwrite risk and write the book and build the book. So and that's where if you find the bargain, like in last two years, the banks were in, at least in the market, they were in bad shape.
Yeah, they were. The HDFC Bank is underperforming, to be clear.
So,
would you say Zomato has left a lot of bad aftertaste in your mouth? No pun intended, but that's the way it
no,
is.
clearly there is a learning in there that, in fact, in our report we wrote that hype cycle, and it just struck me that yes, are we at the top of the hype, and that's what really happened. We piled on to the hype cycle, and it just busted.
You still own Zomato? Or you've sold
We still have. We still have. So we still believe that the story is going to be big, just that we bought at wrong point, at wrong price. So that happens at times. That also gives you learning. That also gives you wake up call. It's not that we were not aware. It's not a 10% aware. We knew that it's expensive. So have a very small portion, 1%, 1.5%, so that you learn. You don't completely miss the bus, but you pay the price for learning. So, but then it was not we are aware that the price value equation is not right at that point of time. It is very euphoric. So, but we are learning in the process, and I still think the digital story of India digital commerce is going to become very large, and some very few large winners will emerge from this story.
Mr. Agrawal, markets, they go through cycles. So, for example, there was a TMT cycle, then there was a capex cycle, then there was a financial cycle. What is going to be the style in the market for next couple of years? When I say style in the market, could it go back to high dividend yield stocks? Could it go back to being, valuing company on book value and enterprise value?
See, markets will always have fads.
Okay.
But you as an investor, you have a way of picking stocks, and that style will never change. At least for me, it will not change. At the margin, I'll tweak.
That's still QGLP.
Yeah, because one mistake you commit, you learn a little more. So still we are committing mistakes, as you said. We talked about Zomato and all. So we piled on to the popular part of the thing. So you learn, so learning is continuous, and but then basic framework of what kind of stocks you like would not change. At least in my DNA is such that I don't think it will further, strengthen the style which you have. So I think every style will have its own time. Every style doesn't work throughout. In 10 years, same style will never work. So a style will go out of favor. Like same cricket team doesn't work. What was still last year the top of the charts, they were bottom of the charts. You saw that IPL.
Of course.
It's very stark.
Yes,
the top two teams were the bottom two teams.
Of course. But markets, I'm sure, are more predictable than IPL cricket matches. At least the big companies to bet on for next couple of years.
Yeah, otherwise you would not. You would not be managing money if you don't have confidence that yes, these are the companies where we have a chance to. Your odds are better in terms of.
You think odds right now are with the long-term investor?
Always.
5 year plus. My time frame of long term is 5 years.
Yeah, so it all depends on the bargain you hit. If you get deep bargains, and that happens in a chaotic markets, like what happened in last COVID times, then the whole thing gets dislocated. Your earnings are not right. The companies which are hugely profitable, they were not having sales, profits, all losses and all. And then market gets confused how to value the company. And that is the point of time, if you have superior understanding of the companies, you can pile on. Even managements lose faith, let me tell you. I know enough stories in COVID time where management lost faith in their own companies. Of course. And the investors and mutual fund managers, they had more faith in the story than the management themselves.
That's the beauty of the market, isn't it? So just to wrap it up, since we started with remembering Rakesh Jhunjhunwala, I'll end up from quoting Warren Buffett. He says that you don't have to strike every ball. Wait. When you get the loose ball, that's the time you hit the bat. He's talking American terminology. So Indian terminology is that in the market, for an investor, is it time right now to stay on the front foot and bat aggressively? Or is it time to come on the back foot? Because January 2022 was the time to come on the back foot. That time market had become euphoric. That time if you went on back foot, it was good. At the current juncture, what is its reward ratio for an investor, back foot or front foot?
I'm not a kind of 100% and 80%, 25%. That kind of a style is not there. I mean, I'm broadly fully invested.
Do you
Always.
front foot?
Yeah, always in the front foot. But you feel sad when markets are down. But that is a patience and forbearance you have to bring in the marketplace. But I mean, I'm always fully bought.
Which was the last loose ball you hit out of the park?
You just talked about it and the fate of it. So
In that you got caught. But which
Yeah.
was the one you managed to hit out of the park?
no, वो तो अभी मालूम पड़ेगा बाद में.
Chaliye, wonderful to have you.
Thank
and
you.
Thank you for joining us. And
pleasure coming here.
It's a loss. It's a loss
Yeah.
for all of us to rule. That we all will miss Rakesh Jhunjhunwala, but I guess the real tribute for him is that we should not forget his learnings and his attitude and approach.
We'll miss him more now. And he will live in our hearts, our conversations, our parties. We'll miss his parties, his presence in the parties.
And the persona and the large heart attitude,
Yeah.
all of us, in a sense, will miss it. Really appreciate it. I'm so glad you could join us.
Thank you.